information session. So I am sharing my screen and we'll just move along where it's not advancing. There we go. Hello, everybody. My name is Melanie Roop, and I'm the Director of Loans and Advisory Services with Women's Enterprise Center. Prior to joining Women's Enterprise Center two years ago, coming up 3, I was a business advisor to women entrepreneurs for over 15 years. And prior to that, I had a long career with one of the major banks. So I'm very passionate about women entrepreneurs. And I feel that during these times, it's all my background and experience has really built up to this pandemic situation that we're dealing with. So I'm here to support women entrepreneurs, and all of us at Women's Enterprise Center are here to support women entrepreneurs, and just want you to know that you are not alone. We'll start then with the agenda. Here's just what we're going to do. I'll tell you a little bit about how I've organized it. So I'll give you a brief introduction to Women's Enterprise Center. We'll do an overview of the Regional Relief and Recovery Fund loan. We use the acronym RRRF and pronounce it RIF. So as I'm going through, I may say RIF from time to time, and you'll know that I'm talking about the Regional Relief and Recovery Fund loan. The way I've organized the presentation is to start out with what does your business need to qualify, and work backwards. So if you're listening and you're listening to what your business needs to qualify and you determine that your business does not qualify, well, then you don't have to stay and listen to the entire webinar. There's other resources for you that I'll be talking about. So you could go on to our website and call us, and perhaps there's some other support that we can provide you with. Then I'll be talking about the expenses that are not eligible for financing under the loan. We'll talk about the repayment details, what you need to do to apply, and what the application process is. And then there'll be time for questions and answers. You're welcome to put in questions anytime throughout the presentation. So as I'm talking, if something comes up, please feel free to put in a question into the Q&A box. So if you look on your screen, you'll see there's the mute, the stop video, number of participants, the Q&A, and it's the Q&A where you'll input your questions. And then I have my colleague Netta, who is watching that, and she'll let me know when there's some questions that people want answered, and I'll just pause as we're going through for any questions. So hopefully this is a session where you get the information that you need on the Regional Relief and Recovery Fund loan. So who is Women's Enterprise Center? Well, if you can see on my virtual background, we have the 25-year logo, and Women's Enterprise Center is celebrating in 2020 25 years of supporting women entrepreneurs throughout the entire province of British Columbia. We're a not-for-profit devoted to helping women. We're funded by the Western Diversification, which is an arm of the federal government. And it's for women at all stages of business ownership. So if you're thinking about an idea and wondering whether you should take the leap to entrepreneurship, or if you're growing and scaling your business, at all stages, we can help you with resources and other programs and services that we have. Our head office is in Kelowna, and we also have offices in Vancouver and Victoria, but we have presence around the entire province, and we work with many partners who are familiar with Women's Enterprise Center and what we do. So we're hoping that women entrepreneurs can find us when they need support. And our support is holistic. So it's not just financing, it's just not just mentoring, it's a whole package of resources. So business advice, skills development, financing, mentoring, and a website that has lots of recordings of previous webinars and other resources available to you. And pretty much most of it is low cost or no cost. Here's a summary of the things that we do and a picture of our lovely client services coordinator, Kathy Burrell. You may phone in or email in, and it may be Kathy that's answering those client services emails. A summary of the things that we do. So business financing, loans of up to $150,000, but we also do much less. So if you need 10,000 or 25,000 or 50,000, we can do smaller loans. It doesn't just have to be for a large amount. And when you need an amount more than 150,000, we partner with other lenders. So Community Futures, Futurepreneur, BDC, and the traditional banks and credit unions. We provide business advice, so we can be a great sounding board if you have a question or you're not sure where to move forward or how to move forward. Then just email into our client services and ask for a referral to a business advisor, and you'll be connected with one of our experienced business advisors to answer whatever question you might have. We do business skills training and provide webinars such as this one. So there's lots of resources of recordings that we've done previously to help you improve your business skills. So many women get into entrepreneurship and they don't have a business background, but they have a great idea. And so this is a great place to come and improve your skills to learn how to run and grow your business. We also offer a mentoring program. If you're a loan client, we can pair you with a mentor at any time. And that includes if you are successful in getting a RRRF loan, you could also apply to get a mentor as well. And there would be no cost as a loan client. And a supportive community. So you'll see our clients profiled, see their pictures on this presentation. We do a monthly newsletter and profile our clients and recommend people for awards, and just really lifting up women entrepreneurs throughout the province. So let's move forward into what everyone came to listen to, which is the Regional Relief and Recovery Fund loan. So I think in Canada, we've been very fortunate that the federal government has stepped up to provide so much emergency financing. And throughout the pandemic, I've been listening on to regular phone calls with the federal government about the programs and listening to people calling in and asking questions, as well as to learning about the emergency relief programs that are available. And the government's really been listening, and that is eventually where they came to provide the RIF loan to fill in gaps where other federal relief measures didn't work. So probably the most common one small businesses are familiar with is the Canada Emergency Business Account of up to $40,000. So this loan is very similar, but if you didn't qualify for CEBA, as that acronym is called, then this would be the next option for you. It offers the same maximum loan amount of $40,000 with a 25% forgivable portion if 75% of the original loan balance is repaid by December 31st, 2022. The RIF loan is intended for companies that were healthy and viable prior to COVID, to cover their non-deferrable fixed expenses associated with retooling. And my apologies for that typo on the slide here. So non-deferrable expenses, and if you need to enhance your online presence or do some other upgrades to adjust your business to the pandemic times. And businesses are finding all kinds of ways of doing that. I think I want to just really acknowledge that this is a really challenging time for small businesses and for all businesses, but we see the challenges that business owners are having, and we hear their stories. And for some, this program will apply, and for others, it doesn't apply. And I think the thing we always encourage is to really focus on the things that you can control. It is challenging. There are ups and downs, and I heard of many stories at the beginning of the pandemic where entrepreneurs were just in shock. They had no idea. Their business revenues dropped off, and they didn't know what to do. But slowly people are finding ways to move forward, finding ways to partner with other entrepreneurs, and finding ways to do business in this new environment. So Women's Enterprise Center, we have a lot of resources, and we're here to help you and to work with you, and for you to know that you're not alone. So let's start with the eligibility requirements.
Melanie,
we have,
can we ask a question?
oh yes, thank you, Netta.
Okay.
Please jump in.
Can you please enhance on what non-deferrable fixed expenses are?
Yep, we will get into that later in the presentation. I go through it in quite a bit of detail. Anything else? Any other questions?
So far, so good.
Okay, great. All right, so let's start with eligibility. So we opened up the program once we got the funding from the federal government. And to date, we've had over 130 applications for this loan. And we have approved about 51% of the applications. So a lot of people have applied and not really understanding what the eligibility requirements are. So I want to spend some time on this slide here, and it really is a checklist to check if your business qualifies. So the first is you need to be a legal entity. And so for a business, it can be structured as a sole proprietor, a partnership, or a corporation. And your business must have been established by March 1st, 2020. So that one hasn't been a problem. The second is that you've been adversely impacted due to COVID-19. So often we see businesses, their revenues dropped initially, but in some businesses, revenues came back once they made some adjustments and they were able to continue on. And we find actually that their business may be reduced, but they are able to operate properly and have they're not struggling to meet their working capital requirements. So that means they're not struggling to pay their bills. And an example of that might be a bookkeeping service or some other service that was able to move online or do work remotely. The next one is the business was viable and not experiencing financial pressures prior to March 1st, 2020. And this key point here is where of the applications that are declined, 76% do not meet this criteria. And so what does viable mean? And what does not experiencing financial pressures prior to March 1st, 2020? So in most cases, these are businesses that are in the startup phase. So they may have started in 2018 or 2019, and they were still building their business and they were not profitable. So they're generating revenue, but they are showing a loss. And when they are having losses, that means that they are experiencing financial pressures because the owner is having to fund the losses. They're having to put in their own money to fund their losses. And when the business is not profitable, it doesn't have historical cash flow to repay the loan. So it's really important to know that the RRRF is a loan. It is a loan from the federal government, which is administered to women entrepreneurs through Women's Enterprise Center. And so we're looking at the business's ability to repay the loan and also at the personal credit history of the business owner and how they handle credit. So we'll look at your financial statements and we'll look at your top line revenue to determine is the business generating revenue. And second, is the business profitable? So are you showing a profit? And then what is your historical cash flow? So we know that revenues are down, which means that the business adversely impacted by COVID-19. So in these times, it's often not the case where the business is making more revenue than they were previously. If they were, then they may not be adversely impacted due to COVID. So your revenues are down, but historically, if we look at your tax returns, was there sufficient cash flow to repay the loan? Because you do need to make loan repayments, and we'll talk about that. So Netta, are there any questions so far?
Yes, we do have one question.
Okay.
What happens if my business was a sole proprietorship before March 1st, 2020
Yep.
and became a corporation as of March 13th, 2020?
That would be fine because sole proprietor is a proper legal entity, and we would just assess the business based on the sole proprietor, which means you have a T2125 filed for 2018 and 2019. And so the fact that you changed to a corporation after March 1st is fine. You would file your taxes differently, but for the purpose of this loan, we would just look at your business as a sole proprietorship. Any other questions so far?
No, we're good to go.
Okay, so if anybody has questions about viability and not experiencing financial pressures, please go ahead and type them into the Q&A, and I'll move on. The next one is revenues less than 20 million and have less than 500 employees. I've put it in there in case people are listening. In most cases, this isn't an issue for any of the applications. The business must be owned and controlled by a woman or women. So we look for 51% or greater, or if it's owned with a husband and wife team, then it can be, the ownership can be 50-50. But we do look that the woman is controlling and operating the business. The business must be based in BC and owned by a Canadian citizen or landed immigrant, and also be a BC resident. So we're just checking to see the address of the business. If there's multiple owners, they should all be Canadian citizens or landed immigrants. But if a small shareholder is not, we can consider that as well. And we look to see that the owners are resident in BC. We look for a good credit score, so that's your credit history. We will pull a credit report, and we're expecting to see a credit score of 600 or greater. And we are also looking to see that taxes are current. So you've filed your 2018 and 29 income taxes, and you have paid the outstanding amount that is due. If you haven't, we can consider it. But that's what we're looking for. The last item here is that you are not getting any other government support for the expenses that you're applying to cover by the RRRF. So if you've got rent support, then you wouldn't include rent as something that you'll be using for the RRF loan proceeds to cover. So there's just not a duplication. Any questions, Netta?
Yes, we do. So Ashley asks, what is the minimum revenue for eligibility?
Yeah, that's a good question. So there is no minimum revenue for eligibility, but the amount of your revenue will impact the amount of loan that you qualify for. So we have seen many applications come in for the full $40,000, but the business is not, they're generating 50,000 or less than 50,000. That's a lot of debt. $40,000 is too much debt for a business that's generating 50,000 in revenue. And so we remember that this loan is intended to cover your non-deferrable fixed expenses and perhaps some expenses for you to pivot or to shift or to cover cleaning supplies due to the pandemic. So when the loan is used to cover your non-deferrable fixed expenses for a period of up to 1 year, then you can focus on generating revenue in the business. And so that's where it takes the pressure off once you've got this financing to cover those non-deferrable fixed expenses. You know that they're covered and paid, and so you can focus then on doing the things that you need to do to generate revenue in the business during this time. Are there other questions, Netta?
Yes, just before I read the next one, I just want to tell people that if you're having trouble typing in the Q&A, please feel free to type your questions in the chat box. I'll read them as well. So the next question, Alison is asking, when assessing whether or not revenue have decreased, do you look at gross or net?
When we're assessing the the application, we look at your gross revenue. We will look at net. Usually they're quite close. So what we're trying to do is understand the business and what is the business, how does it operate? So whether we look at gross or net applies to the business. So generally we would start with gross. We would look at the gross revenue.
Okay. Parina is asking, I bought my business beauty salon 3 weeks ago. Do you think I might be eligible for the loan?
Yes, so in this case, you've bought a business. And so we would look at the business. The business is a legal entity. What does the business meet all of this criteria here? So the issue is if you bought the business, do you have the financial statements for 2018 and 2019? Because we require those in order to assess the viability of the business prior to COVID. So I can share an example of a business that was bought maybe shortly before. So, but we had to go back. They did have the prior year financial statements, and we could see that they had bought a business that was financially viable. It was a successful business when they bought it. And so then we can support that.
Okay, and last question for now. Jill is asking, do you consider increased costs as opposed to decreased revenue?
I would say, yes, I think what we need to do in that case is for you to explain the increased costs. So one of the things that we see when we're preparing the applications, if you just fill in the numbers, we will assess what we see. And sometimes there's more information there that you haven't provided. So if your expenses are up significantly, then write us a page and describe. There's a little bit of space on the application form to provide explanations, but it's a couple of lines because we don't want people to have to write a lot to apply for this. But if it helps us to understand more about your situation, then include it and write it as an attachment and tell us what's going on with your business and why you need additional funding, because we will look at your historical financial information to determine what were your non-deferrable fixed expenses in previous years. And if you're claiming significantly more than you have claimed on your income taxes in the past, well, we need an explanation for that, because it wouldn't be reasonable for you to inflate them without an explanation. And if you have lower revenues, then your expenses may go down. So we are looking for the reasonableness of the numbers that you're claiming. And so give us an explanation if there's a difference, there, a significant difference.
So Melanie, we actually have a few more questions.
Yeah, no problem at all. This is
okay.
a really important slide, and the eligibility is really important for people to understand. And so I'm happy to spend time here, and then we can move more quickly through the rest of it.
Wonderful. So how do you determine non-deferred fixed expenses if company already used SEBA funds, but still experiencing challenges due to new restrictions with certain sectors?
Right. Okay. So the first thing there is, if you have received SEBA, so the Canada Emergency Business Account, through your bank, then you're not eligible for the Regional Relief and Recovery Fund loan. So with SEBA now, you can get up to 40,000. And if you qualified for SEBA, there is an additional 20,000 that you may qualify for. So the government announced that recently, that there's a $20,000 top up for those businesses that received the SEBA funding. But one of the questions that we ask and that you have to attest to is that, have you received SEBA? And if the answer is yes, then you are not eligible for this RIF loan.
Irene is asking, the landlord gave them 3 months rent support. Can I still apply for this loan from WEC?
Yes, absolutely, but you can't double count. So if that rent has been covered, then you can't apply for this loan to be used for rent. But if you have other non-deferrable fixed expenses, then this loan can be used to cover the other non-deferrable fixed expenses.
Okay. I moved my business in 2018 to BC, so I had huge moving expenses and restarting costs. So income for 2018, 2019 were low, but years prior were 60K higher or more.
Right. So it would be good to provide that in an explanation to make sure that we see it. But I would expect that when we do the assessment, we're looking at 2018 and 2019. If you're trying to show that prior to that, you could even include 2017, because that shows I had 2 good years and then I had this drop. And when we look on the 2019 or whatever year it is, we should be able to see that there's higher expenses due to the move. And so that would be something to consider. So I don't see it as a problem, but it is a consideration in doing the assessment to determine the amount that you're eligible for. But provide some explanation of it to make sure that the assessor understands what the situation is.
Okay, another one. Wondering if I have only just started making an income for my business, but still showing profits, if I could still apply and note that the profits are still low.
Yes, the challenge with the low profit is how much debt servicing the business can support. So remember, and we'll talk about the repayment as we move forward in the presentation, you need sufficient cash flow in order to make the loan payments. And we are looking that the business can make those loan payments. And we're really not thinking about, you're going to scale the business through the recovery period. We just like to see that businesses get to where they were historically and basing our assessment on that. But yeah, it's probably a lesser amount, and I don't know what that amount would be until we look at the application. But you have profit and you have some revenue. Yeah. I think what I would just add here is, and I can talk about it later as well, we have our regular loan program, which I talked about earlier, which is for startup businesses. And so we find many of these businesses that are in startup mode could look at our regular program. Like, we can't approve them for, excuse me, we can't approve them for this loan program, but we may be able to look at them in the regular loan program. So that's a consideration as well.
Another question, what if you have 2 revenue streams, one from the business that has been hit hard by COVID and the other has not? Are you still eligible for this funding for the business that is suffering?
Well, I guess it would be if they're 2 separate businesses or not. So the way you ask the question tells me it's one business with 2 revenue streams. That is one business where the revenues and profit would be reported together. So it may be that the business is still not experiencing financial difficulties because of the second stream of business that is still running well. I would just add that we have had some applications where there's 2 businesses mixed together. And so we do have to see those 2 separate legal entities and then understand which business which business you're applying for the funding, and then follow these criteria there. So some of the situations can get complicated, but if you explain it to us, we'll do our best to review it and to support the business if it's eligible.
Do we still have time for more questions?
Yes, I think that's good.
Okay, excellent. If a community futures in my area also offers this loan, do I apply there or with you?
Okay, now, sorry. Yes, if Community Futures is also offering the Regional Relief and Recovery Fund, so you apply either to Community Futures or to Women's Enterprise Center, you get the Regional Relief and Recovery Fund once, not twice.
Okay. If you have less than 50K revenue, say 48K, what would be the loan amount that would be approved?
What was that? If you have 50K revenue?
If you have less than 50, for example, 48K, what would be the loan amount that would be approved?
The loan amount depends on your non-deferrable fixed expenses. And so as we go through the application here, we'll look at what the categories are. And so every business is going to be different. So there's not a fixed amount that you would qualify for.
Do I understand correctly that if my business started up as a sole proprietorship in May 2019, I will not qualify for this program?
That is correct, because one of the criteria is your business must be established prior to March 1st, 2020. So
I'm sorry,
unfortunately,
Melanie, that was May 2019.
oh, 2019. Then sorry, yep, that would be fine because it does meet that criteria. Sole proprietorship meets that criteria. Yes, the challenge is, are you showing a profit or a loss? And many of the businesses that started last year are still in startup mode and not yet showing a profit. They haven't reached break even and not showing a profit. And those are the businesses that are not able to qualify for this loan. And that's where there isn't anything. And that is something that I am communicating to the federal government through this regular phone calls that they have to say that startups, there's nothing for startups. They're not able to qualify. So, but then you can look at our regular loan program, and some of those startups may qualify for through that program. And it's still quite active. We're still getting loan applications for our regular loan program. How are we doing on questions, Netta?
We are good. We covered all of them.
Okay, great. Well, let's move on then. Okay. So moving on. Let's go on to sometimes. There we go. So the expenses that cannot be financed, and this is important to look at when you're doing the application. So owner's wages cannot be part of the funding for the RIF loan. So if you're getting your non-deferrable fixed expenses covered, then you can focus on generating revenue, and then that revenue can be used to cover owner's wages. If you're doing research and development, that's not covered. So we've had some applications where they want to research and develop into new markets, and they want to use the funds to cover that. And again, we can't finance research and development, but if you have non-deferrable fixed expenses in the business, you can use the funding to cover those eligible non-deferrable fixed expenses, and then use your own resources to pay for research and development and do other things. You can't take the RIF loan and use it to pay out another loan, but you can continue to make your monthly payments if you have existing debt, you have an existing bank loan or some other lease payments. And as I said earlier, if you've accessed other federal and provincial relief measures, so the CEBA loan, you can't apply for the RIF loan to cover those same supports. So there's support the CEWS for wages and CECRA, or now CERS, all these acronyms. So the Commercial Canada Emergency Rent Subsidy Program. You couldn't use the RIF loan to cover rent if you're going to apply to that program. So the government just doesn't want you to get funding for the same expense twice. And that's up to you as a business owner to recognize that you're only getting funding from one source for each expense. So if you meet the qualifications and you are successful to get the RIF loan, then here are the repayment details. And what I called it is for phase one. So you receive the funding and there's no interest or principal payments required until December 31st, 2022. So 0% interest, and you can make principal payments whenever you like. And we encourage those who receive the RIF loan to start making payments in January. So if you can make regular monthly payments, then the amount of the payment is lower than if you wait until December 31st, 2022. If you receive the full amount of $40,000, that amount, it has to be paid by then. Otherwise, the loan will convert into a 3-year term loan. Ideally, you want to be able to pay it back by December 31st, 2022, so you can take advantage of the forgivable portion, which is the 25%. So you can take the amount that you receive for the loan amount, divided into 75% of the loan amount divided into 24 equal amounts and make that your monthly payment. But we know in some businesses, it will take longer for the revenues to increase. And so you focus on generating the revenues, and when you're able to make some principal payments, then you're encouraged to do that rather than leaving it as a lump sum at the end. If you're unable to make that, you are therefore responsible for the entire amount that's outstanding. So 100% if you haven't made payments or somewhat less. And then that amount that's outstanding will convert to a 3-year term loan on January 1st, 2023 at a 5% annual interest rate. Okay, so if you're not able to pay the full amount or 75% of the original loan amount by December 31st, 2022, on January 1st, 2023, your outstanding balance will convert to a 3-year term loan. And the first payment will be due on January 15th, 2023. So it immediately starts with 36 monthly payments to repay the full balance by December 31st, 2025. During the term of the loan in the phase 2, you can make principal repayments at any time. But we treat it like a regular loan. Netta, any questions?
Yes, there are questions. Can the loan cover mortgage payment for business?
Yes, if it's a regular monthly payment as part of the business, then it can. We've sometimes seen that if it's a sole proprietor, then that mortgage payment is not the business payment, it's a personal payment. So if it were a commercial space, it might be a full business payment. But if it's personal, then you couldn't cover those mortgage payments.
Would you please give a few examples of non-deferrable fixed eligible expenses?
Yeah, we're going to come into that, I think, on the next slide.
Okay, so one question before that.
Okay.
What if I get the loan as a safety net and not use it? Will I still be given the forgivable portion since there is no amount outstanding by December 31st, 2022?
Yes, so, well, we are looking in the assessment if you need it. So that is if your revenues are down and you have these non-deferrable fixed expenses, then you probably need it. If you don't need it, then we would see that your business is not experiencing financial difficulties. So you might be declined on that basis. But once you get the loan, you're presumably using it for the non-deferrable fixed expenses that you've covered. To answer the question, as long as you repay 75% of the outstanding loan balance or the original loan balance by December 31st, 2022, then you claim the 25% forgivable portion. We're assuming that you've used it and that you needed it.
So there are no more questions.
Okay, great. So let's keep moving on. The next part of the information, what are the eligible expenses? And so you can begin to see them listed here. These expenses are categories that are listed on the application form. So, I see that we're getting somewhat close to 11 o'clock, so I don't want to spend a lot of detail here. This information is available on our website, and it's also itemized on the application form. A couple of things that I'll highlight here. So we can cover expenses for your employees. As I said previously, we can't cover owner wages, but if you have applied and received the Canada Emergency Wage Subsidy for your employees, you can't double up with covering it by the Regional Relief and Recovery Fund. If your business has property taxes, rent we've talked about, utilities, cleaning supplies and additional safety measures, that would be above and beyond what you would have had in previous years. And then you have also bank interest and charges. So if you're selling online and allowing your clients to pay you through credit cards, you have credit card charges, and you may have a monthly debt servicing loan payment, and that can be covered as well. Office supplies and operating expenses, lease payments, fees, insurance. One expense that I've seen is advertising. So something like advertising is a deferrable. It is discretionary to a certain extent. So we may not approve a large amount for advertising, but if you come down to the last section here, we know that there is some modifications in your business that you're working on. A lot of people are doing social media, enhancing their online presence. So some expenses in there in order to increase that online presence would be considered. And throughout all of this, we're looking for your reasonable fees, and the reasonable fees is based on the size of your business and what it was prior to COVID. We have questions, Netta?
Yes, we do. Would masterclass payments for business expertise be considered?
What kind of payments?
Masterclass payments?
Well, I'm not sure that's non-deferrable. We'd look to fit it into one of these eligible categories. Any other questions?
So there is a clarification here. Masterclass are online classes with experts in their field.
Yeah, I think it would depend on the business and the amount of the expense. That's a little bit specialized one, and it would just have to be the overall. So we would consider the business and what their non-deferrable fixed expenses are. And then, approve a lump sum, and then how you choose to use that funding is up to the business owner.
Is it possible to use my other asset as a guarantee to apply the loan instead of the net income for the previous operation years?
No, this loan doesn't take security other than, I'll talk a bit, we take a general security and your personal guarantee, but it doesn't take any collateral. But if the business didn't qualify for this loan, you could consider our regular loan, and there we would, you could take collateral.
How can I apply? Through website or email?
Yes, so I'll talk about that in a moment, how to apply, and it's through our website.
What about modernization of LOBs with technology to adjust to COVID delivery?
Yes, that could be an eligible expense. Often what's happened is we don't have enough information. And so if you're applying for a large amount of the loan to be used for retooling, um, we need quite a lot of detail to understand to ensure that what is being requested is adjusting to the current business, and not creating a new business or something really big that should be financed through our regular loan program.
Okay, another question. Training support for tech and media platforms. Would those fees be eligible?
Those we would look at on a case-by-case basis. It really depends on the business and what sort of tech. So yes, certainly, moving your business online and enhancing your digital marketing and your online presence, we know that's very important during this time and then any time. So certainly we can look at that. It's on a case-by-case basis. And really, please explain. Give us as much detail as you can so that we can understand. And we're really looking on the funding that you're applying for. Is it enough for you to complete what you're saying you want to do? Because there's no point in taking on debt and then getting partway through and not being able to finish it. Remember, this is a loan. It does need to be repaid. And so we're looking for the ability of the business to repay it. And yes, we've seen some applications where people are asking because they want to sort of take the business in a new direction. But when you take your business in a new direction, you're really starting a startup all over again. And we know that takes a lot of capital. And that's not the intent of this. The intent of this is to cover non-deferrable fixed expenses so you can continue to focus on driving revenues rather than creating a new startup.
Okay, that's it for now.
Okay, so let's carry on. So here's all the things that you need to apply. If there's any questions about this, and I'll run through some of them, but this is all included on the application form. There's a checklist or a list of all the things that you need to include with your application. So the key things are financial statements, if you're incorporated or a partnership, or if you're a sole proprietor. Each year you submit a T2125 with your income tax return. So we're looking for financial statements or a T2125 for 2018 and 2019. So the last 2 years. We're also looking for the 12-month cash flow. So that's now going forward. And it's only 12 months to show us how you expect to be able to run your business going forward. You need the completed and signed application form, a copy of photo ID, so it's government issued photo ID, and most people give us a copy of their driver's license, which also shows us their residence or their address. We need a copy of your Canada Revenue Agency notice of assessment to show that the income taxes are paid and up to date. If you're incorporated, we look for the incorporation certificate and a central securities register, which shows us the shareholders and the number of shares they own. We also need a copy of your business license and proof of your business insurance. So we've seen some businesses where they didn't have that yet. So you can just let us know that you don't have it yet. We can look at your application, and if it's to be approved, then those things can be put in place. If you have premises, we look for the lease agreement. And if you are have shareholders or a partnership, then we look for a shareholder or partnership agreement. So those things are all listed. I don't know if there's any questions, but certainly happy to answer them.
So Diane is asking, is that a civic business license or a government GST number?
Civic business license, so whatever municipality you are. And we know in some areas of the province, a business license is not required, so you can just let us know if that's the case. We also know in some municipalities, they have a very long wait time in order to get the business license, so you can just show us that you've applied for it and paid the fee and show us the receipt, and that is usually okay.
That's it, no more questions for now.
Okay. So the application process then is look at our website. We've put a lot of information on the website on the RRRF page, and I'll give you that URL later. To make sure that you're eligible. There's a lot of information about that. Then as you go down the page, there's 3 questions about the loan, and you just have to check off those. And if you're eligible, then you'll get a link to the application form. When you get the link to the application form, then you should download it onto your computer. It's a PDF, a fillable PDF. Do not start filling it out before you've actually saved it to your computer, because it doesn't save the information that when you send it in, it will be blank. And so download it, save it on your computer, then complete the information so that you can then email it into us at the email that's on the form, and make sure that you've signed the form and include all the required documentation with it. So when we receive your application, we will acknowledge receipt once we have all the information. And if anything's missing, we'll just ask you for that additional information. And once we have all of the supporting documents and we received your application, it goes into the queue, and we have loan assessors that are reviewing each application, and we'll go through that. So depending on the volume of applications, it can sometimes take a couple of weeks, but we are trying to get through the applications within 3 weeks. Sometimes it's a little quicker and sometimes it can be a little slower, but you will get acknowledgement of your application that it's been received and ready to be assigned to a business advisor. It's assigned to a business advisor who will review the application. If they need additional information, you'll be contacted, and otherwise we'll make the assessment and the decision, and then you'll receive an email stating whether or not your application was approved. And if it's approved, the amount that's been approved, which is sometimes lower than what's been requested. So I know we've had a lot of questions throughout the presentation, and I hope they've been helpful. If there is any other questions, please don't hesitate to ask. I'll certainly stay on for another 5 minutes or so for anyone who has questions. Please look at the website, which is wec.ca/RRRF, or you can just go to our homepage, and on the revolving photos at the top, click on the one for the RRRF loan. If you have any questions at all, please contact Client Services with an email or a phone call, and just ask whatever question it is, and they'll direct you either to a business advisor with questions or to someone who can answer your question. But please check out the website, because there's a lot of information there, including over 20 frequently asked questions. So we've tried to provide as much information as we can there. And then if you're ready to apply, complete the application. A couple of things about the application: the better sort of organized and prepared that your application is, the easier it is for us to assess it. We're really trying to see that if you qualify, that we can approve some funding for you. We want to support and help businesses because we know that they need support. If you have any questions, once you receive your email, we do get questions back, and we're happy to answer them. If we've missed something you feel, we're happy to review it. We're not trying to prevent people from getting the money. We're trying to get the money to everyone who qualifies. You are not alone, and if you're not approved for this financing, we have many other programs and supports available, and we will do our very best to help you in whatever way that we can. Any questions, Netta?
Yes. If I'm a sole proprietor, do I need to show a business license?
Well, if you have one, yes. If you don't have one, we can do the assessment, but you may be required to provide one prior to getting the funding if you're approved.
There is a request to, again, please explain non-deferrable fixed expenses. And I'll read another one with on the same page. Clarification is requested. If the non-deferrable fixed expenses were not covered by SIBA or other government programs, is the business eligible? Or is it basically if business applied for any government program, then it is not eligible for REEF?
Okay, so a couple of questions. One is non-deferrable fixed expenses. So those are the categories that I went through a couple of slides ago. And if you look at the application form, they ask in specific categories of non-deferrable fixed expenses. And so that's where you're completing what are your non-deferrable fixed expenses. So your insurance, your professional or bookkeeping fees, your bank charges, your utilities, those are kind of insurance. I think I said that one's main ones that people apply for. So regards to if you've received support for rent, you can still apply to this program, but we won't cover any of your rent that's covered by another program. So you can't duplicate and get funding for one expense from two sources, but you can get funding for other expenses not covered by rent or not covered by the wage subsidy program or not covered by another program that you found.
If my business is a portion of my home, will my lease agreement with the homeowners be sufficient?
If your business is in your home, then we see that your business address and your home address are the same, then we do not require a lease agreement because it's your home. That lease agreement is primarily if you're renting a commercial space from a landlord.
What is the timeline from submission to approval and then receiving funds?
So timeline from submission to approval is usually a couple of weeks. We try and respond with a decision within 3 weeks. If we can do it faster, and sometimes depending on volumes, it can be slower, but I think within 3 weeks, you should have a decision. And actually our turnaround time is pretty good right now, that usually we can move forward with the funding within a week. So what that means is we'll provide you with the loan agreement. It is a formal loan agreement. It includes a general security, which pledges the assets of all your business through the general security agreement, and it also includes a personal guarantee, which means you are personally supporting this loan as well. So that loan agreement documentation goes out. You need to sign it. Once we have everything signed and it's checked and is in order, then we can move forward with the disbursement, and that disbursement goes as a direct deposit into your bank account.
Once a loan recipient, what services are available via WEC to the borrower?
Yeah, great question. So all of the supports that I've talked about, I think I have a slide here. Yeah, business advice, mentoring, skills training, all of that is available to our loan clients, including the RIF loan clients, at no charge. We're also going to be running a mentoring peer circles for the RRRF loan recipients. So if you receive a RIF loan, we'll be setting up peer mentoring circles so that on a quarterly basis through the year 2021, we'll bring a small group of 8 to 10 clients together, just talk about different challenges and answer questions with an experienced business advisor. So lots of support in addition to just getting the financing from us. And I would say that's a good reason to apply for the RIF loan with Women's Enterprise Center. If you go to your bank or elsewhere, you don't get this whole wraparound holistic support.
Yeah. If I have received a grant, would I still be eligible?
Not sure what the grant is for. I haven't seen that in any of the applications. It's not included. So again, it's up to you as a business owner that you're getting funding for your expenses from one source. So if you've received a grant to cover some of your expenses, then that's what you can't apply again for others. But it's really up to you to show that you're not getting funding from multiple sources for one expense.
Can I use interest portion on my mortgage used as my office?
That is all part of the T2125 in what portion of your home expenses are covered by your business. And so in that T2125, there's a section in there that shows the business portion of your home expenses. And that's a portion that's eligible for the RIF loan as a non-deferrable fixed expense.
Do you have to be in BC to apply with WEC?
Yes, for Women's Enterprise Center in BC, you must be a resident of BC, but this similar program is available through the other Women Enterprise initiatives, which are also located in Alberta, Saskatchewan, and Manitoba.
That's it, no more questions.
Okay. Well, thank you everybody for the many questions and filling in the gaps where I might have missed out. And there've been some really great questions. Please contact us. The information here. You are not alone in all of this, and we know that it's difficult times, and whether it's through the Regional Relief and Recovery Fund loan or our regular loan program or our training, we're here to support women entrepreneurs in BC. So please contact us and let us know how we can help you. So I'll stay on for a few minutes. If there's any other questions, please don't hesitate to ask. And otherwise, thank you very much for attending. Good. I think we're done. Netta, any other questions?